Would you take free money to buy a home? Because that is exactly what's happening in 2025 in real estate. Sellers across America have made so much equity over the last 5 years that they're literally handing it to buyers to buy their homes so they can move on to new ones. From credit repair to buy downs to new interest rates, we are going to tell you guys about everything that's happening in real estate that makes it the best buyer's market since 2020. As always, I'm joined by Mr. Bill Gaylord. He got real snazzy for us this morning. I appreciate that.
I told
Bill.
him I got dressed up for him, but it really wasn't for him.
Yeah,
but,
for me.
you know.
He even has the flower on the collar. My
yeah,
man's
yeah.
looking clean. Come on. Bill.
Yes. By the way, that was a great intro.
I think
It's so true.
I think so. This is the best buyer's market since COVID. In fact, that's probably the title of our next episode. This is the best buyer's market since COVID. And a lot of buyers aren't being told why. And the reason is, as always, the media likes keeping people poor. So if they went out and told everybody, hey, it's a great buyer's market, go buy, right? People would start making good decisions instead of living in rentals and throwing their money away.
Yeah.
Right? So, Bill, let's start right here. The seller equity explosion. Free money. Can you explain to the audience what that means?
Well, you talk about it. You've talked about it many times where in the most recent market, you are getting closing costs paid for by the seller on virtually 100% of the transactions that you're doing.
Yes.
So over the last 5-7 years, the seller's equity has gone, like you said, it's exploded upwards. So they've got $100,000, $200,000, $300,000 of equity. Now they're trying to move into a different home. Their lifestyle has changed. They may need more house.
Yes.
They may need less house, but they're ready to move on. They have so much money that they're sitting on, a pile of cash. And guess what? They're giving some of that cash to the buyer, and they're going to have a lot left over and still be really well off.
The problem is the average home buyer doesn't know how big that pile of cash is, but don't worry. We got your back.
We have you covered.
Right now, the total homeowner equity in America has hit its all-time high of 30 trillion in quarter one of 2025.
It's huge.
That comes directly from the Federal Reserve.
Yes.
$30 trillion right now in American home equity. The average U.S. homeowner is sitting on $275,000 in tappable equity. Bill, can you explain to them what tappable equity means?
It means that they have $275,000 sitting in the piggy bank of their house. And if they need to access it, they can access it through a home equity line of credit.
Mm-hmm.
They can access it through a cash out refinance. There's so many different ways to do it. In fact, I was meeting with someone this morning and they're thinking about buying an investment property. And guess what? Their house is worth $625. They paid $350. Very similar to what you're talking about.
Easy.
They owe $300,000.
Yeah.
They'll get a home equity loan of $100,000, buy another property, and basically leverage the money that they have in their house.
Yep.
And it's free money for them too.
From 2020 to 2024, home values across America increased nationally by 42%. Now, we even have some more explosive markets. For instance, Las Vegas, the market that we're in, increased by 50%. So over the last 4 years, the average home in Vegas has increased by 50%. Places like Phoenix have grown 57%, and Tampa, Florida leads the nation at 60% growth. That's insane, right? Over 64% of homeowners own more than 50% of their home. I'm going to repeat that again.
It's huge.
Over 64% of homeowners own more than 50% of their home. So whatever they bought it for, they are already halfway through with equity and cash on hand.
Yeah.
That's crazy, right? What does this mean for home buyers? These sellers aren't broke.
No.
They're equity rich and far more likely to negotiate. Let's go back to our favorite place, Bill. Let's take them back to the nightclub. Let's take them back to the nightclub. Let's take them back, okay? You're in the nightclub. It's ladies' night, and these ladies are rich off equity. All of them have money. They don't, you go to a normal club, they're looking for the rich guys who have bottles at the table, guys who have resources. What happens if you walk into a nightclub and all the women are already financially successful? They're not picking you best based on how much money you have. No, 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 no. They just want the nicest, best buyer at the time. That's the market right now.
Yeah.
Sellers have so much money on hand through equity that they're willing to give it to you if it means getting out of their house and into a new one. So that's what I want to talk about. Why are sellers handing the money back? Where does the free money come in for buyers?
So I'll give you an example. Right now, somebody lists their house as a seller. They know that the market is shifting a little bit from a seller's market to a buyer's market.
Yeah.
But their house is listed for a reason. Guess what? They want to sell the house.
Yes.
Now they have a pile of cash of equity in their house.
Yep.
Let's say, for example, they have a $200,000 of equity. A buyer, how are they going to attract a buyer? There's less buyers out there now.
Yep.
They're not being the Buffaloes, but a buyer comes in and they buy the house. And the seller and the buyer asks for $15,000 of seller credit. Well, if the seller has $200,000 of equity and they give up $15,000 and they get to move on to their life and they know certainty that they can get that money and go on, they still have $185,000 of cash left over after giving free money, $15,000 to the buyer. Now, I'm going to keep going on this.
Keep going.
My little rant here.
Go on.
One of the hardest parts for home buyers right now is to save money. Everything is more expensive. You got inflation. How do you save money? It's hard to save money. Many people tap into their 401ks, but to save money for down payment, it's more than you need more typically than a down payment. You have closing costs on top of that. So for example, if you buy a $400,000 house, 3.5% interest, that's $14,000 that you would have to save for a down payment. But wait, you have to have another $10,000 to $12,000 for closing costs.
Yes.
And this is where the seller gives you free money,
Yes.
the 10 to 12 to 15,000 to let you buy the home. You don't have to save another year.
Yes.
When the market changes
Yes.
and potentially interest rates go up. And it's just huge right now.
I always tell first-time home buyers, it's not the down payment. Everybody's like, oh, well, Brandon, I can't make the down payment. And I tell them, look, if you're struggling with a down payment, there's down payment assistance programs. There's things we can do. The one thing that we usually can't cover are the closing costs, right? But in this market where sellers are giving out free money, they'll cover your closing cost, right? Because as you said, a seller is sitting there. They're up $120,000 in equity.
Yep.
You tell them, hey, look, I need $12,000 to pay off my closing cost. Do they want to give you $12,000? No, we're all greedy. We want to keep all the money that we've earned. Am I going to give you $12,000 so I can get into my house quickly? Of course I will. And this is the big thing buyers need to understand. It's called leverage.
Yes.
Okay? These sellers want to be buyers. They're looking at the market. They're like, oh my God, I can just offer anything I want on a house? Okay, great. I need to sell my house as quickly as possible, right? They want to join the club too. They want to get in on this buyer spree too. So if they have to give you $12,000 so they can go save $30,000 on their home, that's the move we're making. In fact, this is the conversation I'm currently having with my sellers. We just had a guy, great guy, beautiful house, single story house over by the airport. In a normal market, Bill, in a normal market, $650 to $700. If this was 2023, 2022, $650 to $700 wouldn't even blink an eye. Guess what? We had to list it for $630, and it sat. And it sat. We ended up taking $590, and the seller got all their closing costs paid. Why? Because my buyer wants to sell this as fast as possible so he can go rip off somebody else.
it makes sense. They want to move on. They want to
Yes.
get on with life, and they've got enough equity to do that. I mean, I've got a situation right now where it's a $675 list price,
Yeah.
and the buyer was going in and wanted closing costs and want this, and all of a sudden, they're down to $615.
615.
$615 and potentially closing costs. And because the seller has the equity, but they want to move on.
Yeah.
They want to get out. And so they're definitely giving some of that pile of cash away to pay for those closing costs.
Yes.
And it's huge. It's huge for the buyer because it takes a long time to save money.
Why don't they talk about this on the news? This is one of the big things I try to explain to home buyers. Turn on the news. They'll tell you about the interest rates. Oh my God, the interest rates.
So unaffordable.
They'll tell you, they'll scare you, they'll scare you, they'll scare you. Never have you turned on the news and they've been like, man, sellers have so much equity in their house right now, they're willing to give it away. They never talk about this, right? And again, it's because they want a nation of renters. This is something you have to accept. We're honest about it here. A lot of realtors aren't honest about it. They want a nation of renters. That's what they want. You have to overcome that, and we want to provide the facts and information that help you overcome that, because it can be scary, right? It can be scary.
Yes.
If everybody's telling you, you talk to your mom and your uncle, oh, it's the interest rates, be scared, be scared. You go on social media, be scared, be scared. You turn on the television, be scared, be scared. Nobody's giving you information to be confident.
It's every real estate agent, including you, Brandon, I hate to say this, and every mortgage originator, including me, everybody thinks we're salespeople. We're just trying to tell them what to do and sell, and you don't know anything, and this is not like, it's not that way, right? And so it's hard for them to, who do you trust?
Who do you
trust? And you got to figure out who you trust.
Yeah.
But I'm going to give you an example. If you had to save $12,000 for closing costs, how much would you have to save? How long, if you saved for a year, how much would you have to save each month?
$12,000 for closing costs? I mean, you're looking at about $900, right?
$1,000 a month. God, you can't do math. I'm the math guy.
Oh, I'm sorry. I'm like 9 times 12.
No, I know. So $1,000 a month. Is that hard to save? Is it hard to like take out $1,000 of your budget? Now, and if the mortgage payment may be a couple hundred more a month because the interest rate's a little bit higher.
Yeah.
And the seller's giving you $12,000, man, it just makes sense to do that. And that's going to be the highest mortgage payment they're ever going to have, because they can refinance when the rates go down, and they will go down at some point in time.
You're right. Let's give people a live case study.
Okay.
Right? Because a lot of times we talk in hypotheticals. We try to give real cases from our own situations. You from the lending side, me from the buying and selling side, right? So let's give an actual case study to people who are watching and listening. People watching on TikTok, thank you guys very much. We will definitely get to your questions after. Make sure you guys check in on the YouTube. Ask your questions on the YouTube if you want us to get your questions answered immediately. All right? Case study number 1. Suburban Las Vegas FHA buyer, which means they're putting 3.5% down. Here's something you guys need to know as an FHA loan buyer. You are allowed to get 6% from the seller. One of the benefits of the FHA loan, and we should probably talk about this on the next.
Let's describe that. 6% on the sale price.
On the sales
price.
price.
So if you have a $400,000 sale price, that's $24,000.
$24,000 that they can give you. So in this situation, we have a home price of $420,000, right? The seller credits you $18,000 because, again, they probably bought this $420,000 house for $300,000, $320,000, right? They're up $100K. They credit you $18,000. You can use that to buy down your interest rate or cover closing cost. That's one of the big things that I'm going to have you cover, is that you can use this money to buy down your rate, okay? So they gave you $18,000 in seller credits. You're paying $7,000 out of pocket total, and you can use the rest of the money to buy your interest rate from 6.75 to 5.125, okay? A lot of people don't know you can do that. They don't know that you can take the seller's money and use it to buy the interest rate down. So Bill, explain how that's possible.
Yeah, so essentially when you go to really market the interest rate, they have what's called par rate. And the par rate is kind of what the general interest rate is in the market. So for example, on an FHA as of today, it's right around 6.25%.
Okay.
Right. So that would cost 1% of the loan amount. And then what ends up happening is when you put more money down, you're basically buying down or lowering the interest rate with money.
Yeah.
And so you're prepaying kind of the interest up front to lower the interest rate. So that 6.25 right now, if you put 2%, 3% towards it, it will go down into the 5s.
Yep. Second example, VA buyer.
Yes.
Our favorite.
I love it.
Again, if you're a veteran with the VA loan, you have the greatest loan on earth, and we're going to show you one of the ways you can take advantage of it.
Shout out to my daughter in Hawaii,
Hey.
Navy girl.
So, VA buyer, $400,000 home. They're putting 0% down because they're a veteran and they get that loan. Now the seller says, we're going to give you the maximum amount in seller credits, right? So not only are they buying with 0% down, not only is the seller paying all of their closing costs, if they have any additional money after paying all their closing costs, they can then buy their rate down. So they're getting a house with no down payment, no closing cost, and we're going to buy their interest rate down on top of it.
So that's truly a
Zero.
$0 out of pocket
Yeah.
loan. And then I know you did one recently where there was extra money and you paid the HOA fee for a year.
Oh, this
right?
is good. All right, let
You
me tell
paid
the
it for
story.
a
Let me tell
year.
the story.
I
This
love
is
that
great.
story.
This is probably this. Let's make this our TikTok story of the day, okay? I'm going to tell you the greatest ripoff that a veteran has ever gotten on the VA loan. We bought a brand new build listed for $750,000. We got it for $700,000 because we're in a crazy buyer's market. He put 0% down. We got the builder to contribute enough to pay all of his closing
All of
costs.
them.
We had so much money that we used it to pay off his HOA for a year. So he had no down payment, no closing cost, got the house $50,000 off, and we paid his HOA off for a year.
And the interesting thing there too is of the closing costs, they paid for his homeowner's insurance for a
Yes.
full year.
Yes.
They paid for his impounds for probably 3 months.
Yes.
He paid their taxes for two months or
Yes.
3 months. You got it all.
We got it all.
And there was zero money out of pocket.
Yes. The best way, and again, we don't want to offend anybody, but we want to tell you guys the truth. The best way to describe the real estate market in 2025 is if I walk into a nightclub with my chunky ass on a normal night, I'm like a 4. But with the current real estate market, I'm like an 8 or a 9,
You're
right?
good looking, man.
You might have looked at me before and been like, we could do better. But when you walk into the club and I'm the only guy in there and I got a good job and a nice car, you're like, I could deal with his chubby ass for a little while. That's the current real estate market, right?
Because there's not as many buyers.
Exactly.
They're not there.
Houses that would have never given you a second look last year are now desperate to have you. You're the prize. You're the reward. They're coming after you with free money.
Yes.
And we have to encourage people to take advantage of this. So let's talk about the big elephant in the room that's not me. Interest rates scare people. Why shouldn't they be scared?
Well, I think they get scared a little bit because of the media. The media just blows it out of proportion.
Of course
I
they
do. But reality is people look at the payment and they go, ooh, that's outside my personal budget. And the reality is if they buy now, they could potentially buy a house for $20, $30, $50, $75,000 less right now than if the rates were lower. And what's going to end up happening is when the rates go lower, that herd is going to come back in and buy. And that's where my Buffalo analogy is. You got to buy, you got to like run into the storm and make it happen now. You might have, it'll be the highest mortgage payment you'll ever have. But if you look back over the past 10 years, past 7 years, Brandon, has your income gone up or down?
Well, for me, up, but I'm a special situation.
But most people are going to be better off over the next 10 years than they are right now.
Yes.
And so, and then they can lower the interest rate down the road. And we have a Lender for Life program where we waive all lender fees.
Repeat that again.
We have a Lender for Life program where we waive all lender fees on a refinance.
Come on, guys. So they're not even going to charge you to refinance your home. Bill, let's give them the great interest rate analogy, right? We want people to be confident. We want them to be buffaloes. We want them to be the most confident guy in the room. Let's give them the information that they need to be confident. Austin, podcaster Austin, can we get this information on the screen? Like when we cut the video, if I give you a piece of information, how hard is it to get it on the screen?
You just have to remember to send it to me, Brandon.
Okay, I will remember to send it to you. So we are going to put a mortgage calculator on the screen for those of you guys watching. Here's how it goes. I always ask people, okay, the current interest rate is about, let's call it 6.5. Round safe numbers for people.
That's a good FHA.
That's a good FHA loan. I always ask people, what's an interest rate that would make you less scared? And they always say, well, I want the numbers we had during COVID, 3%. And I go, well, during COVID, did you buy? Well, no, I was afraid the world's going to end. Of course, you're scared no matter what you do. But, okay, let's take a $400,000 house at 6.5%.
Okay.
Okay. Here's the question I ask for people. What do you think that house would cost at 3%? People have this idea that the interest rate goes down and the housing price stays the same, but that's because they've never taught people what the interest rate actually does. The media scares you with the interest rate, but it'll never teach you what it does. So you have a bunch of people, millions of them, thinking that that $400,000 home that they love will be the same price if the interest rates go down, and it won't. Bill, what happens when the interest rate goes from 6.5% to 3%? How many new buyers hit the market?
For every 1% drop in the interest rate, it can bring in potentially 5 million new home buyers.
So if we go from 6.5% to 3%, we're letting on 15, 16, 17 million new buyers. Okay. What happens to the cost of the house when we loan people way more money and there's way more people looking for? What happens when you're in the nightclub?
Well, number one, there's not enough houses.
There's not enough houses. Well, that's why we always go back to the nightclub, because when you go to a nightclub, there's never enough girls there. Okay. What happens to a nightclub when you add 1,000 dudes to it? Do your odds of success go down? Yeah. Do those girls' standards go up? Yeah. Are you expected to now buy drinks for her friends? Yeah. Well, the real estate market's the same way, right? So you have a $400,000 house at 6.5%. People need to hear this. If the interest rate goes down to 3%, that house is over $500,000.
Easy.
Easy. And this isn't an exaggeration. You can look at 2021. You can look at all the equity we just told you guys. The average American is pulling in, $180K in equity over the last 4 years. This is what happens when the interest rate's low, right?
Yep.
So take a house that's $400,000 at 6.5%. Take that same house at 3%, right? Now the price is $525,000, $530,000. The mortgage difference is about $100 to $200, but you've lost $100,000 in equity. Bill, in what situation, if I offered you right now, Bill, I'll either give you $100,000 right now or $200 a month.
I'd take $100,000.
Everybody in the world would. But yet when it comes to the interest rate, people continuously choose the $200 a month over the $100,000 in equity. And it's the one thing that we try to convey to people who are scared about the interest rates.
Yeah, it's risk. It's really, people are afraid of risk.
That's what
and
it
they
is.
freeze, they pause, they don't know what to do. And it's scary to them. And the people that are really being bold and making the dive into home ownership right now, being a little bit uncomfortable, paying a little bit more on their mortgage. Guess what? They are going to benefit tremendously. And I'm going to give you, I've talked about this before. When I got into the industry 32 years ago, the number of transactions when I got in was about 3.9 million transactions. That was 32 years ago. Today, last year, there was 4 million transactions, only barely more than it was 93. Now, the population has grown by 85 million people since I got in. Households have gone up by 45 million. Builders stopped building homes for 10 years because of the meltdown in 2007, 2008. And there's just eventually not enough home. The average first-time home buyer is now 38.
Come on.
It's going up, and people want to get into a home. So when rates do go down, guess what they're going to try and do? They're going to try and go right in.
Splurge. And even worse, you're not just competing with other retail buyers. You're competing with Vrbo, Airbnb, international investors, rich people, super rich people. investment companies, real estate groups like Jeff Bezos. You're competing with the richest people in the world for the greatest real estate in the world. That's who you're competing with.
How long will free money last?
Free money will last until the market stops being afraid. The best example I have for this, bars in Las Vegas have never made more money than the period right after COVID. Remember that? Where we all just decided to stop being afraid? You couldn't go to a bar in Vegas that wasn't packed, right? Because when humans come out of being scared, they go the opposite direction.
Go all in.
We went from, oh, I'm too scared to fly, to I'm booking flights anywhere, I don't care. Airlines have never made more money than during COVID, right? When we came out of it. And real estate's the same way. Human beings only like being afraid for so long. And when they're done being afraid, they come out swinging.
Yeah.
So I can't predict when the market's going to turn, but I can tell you this, when it does, it's going to be gross. Prices around the country are going to jump up the same way they did during 2021. So what I want to give people, what I want to leave people is just, let's call it our 5 tips.
Can I throw my 2 cents in first?
Oh, yeah.
Okay.
Bring it, Bill.
So I don't think that you can predict the market. I don't
No.
think that you could ever say, oh, it's going to come down in 3 months, 4 months, 5. But here's what I see. Here's what I know.
Mhm.
So we are in the market in the last couple months because of the tariffs, because of the wars, because of all that's going on. People have paused. Buyers have paused. Buyers have just frozen. Inflation is, on a general basis, moving in the right direction downward. There is a deregulation bill in Congress that if that passes, the interest rates could drop by probably 20, maybe a quarter to a 0.5% without any economic change. They're talking
terrible.
about 2 more rate cuts this year. We're also looking at potentially the slowdown in the market. If we get to 6.5% on a conventional basis and we get to 6% on a FHA, which is not that far away,
Yeah.
the activity spikes, and that free money
Yeah.
could go away quickly.
Instantly.
But who's to say? It's just you never know. But I can tell you right now, the free money is there,
Yeah.
and it's there for the taking. The sellers want to give it, and the buyers, in my opinion, should take it.
Just take it. So here are 5 tips on how buyers can just take people's money. This is a great TikTok clip, Austin. You ready for this? Here are 5 tips for how buyers can just rip off sellers in this market. Are you guys ready? Number 1, look for listings on the market 30 plus days. Why 30 plus days? That means the sellers paid the mortgage. There's nothing more infuriating than paying money for something you don't want. Have you ever seen a girl who's ready to break up with her boyfriend and then he crashes her car or breaks something and she's like, oh my God, I don't even like you anymore and now you're costing me money? Like, there's a fury and a rage to paying for something you don't want. So if you catch a buyer or if you catch a listing 30 days on the market, that seller's paid the mortgage and they're not happy with it, right? Target those houses.
Good point.
Number 2, target houses that have already dropped their price, right? Those sellers are often the most flexible because, look, they've already admitted that the price isn't where they want it to be. And especially if they've dropped their price within like a week or 2. A lot of sellers don't want to drop the price until like a month, 2 months in. If it's been a week or 2 and they've already dropped the price, that's a seller telling you, I'm ready to go, okay? Use proper language. This is the big one, Bill. Would your seller consider helping with a rate buy down or closing cost? As an agent, this is one of my favorite things to ask a seller. Would your seller be willing to help? Would they consider it, right? That's always my favorite thing to ask. Finally, here's some extra tips for FHA and VA. One of them we gave earlier. FHA and VA loans allow for up to 6% seller contributions. So a lot of times people think the FHA loan is a bad loan or that conventional is better. I think right now the FHA loan is a great loan.
Amazing.
Because it allows up to 6%. We're in a market where a seller might give you 6%, so utilize it and take advantage of it. And finally, for realtors who are watching this, who maybe not be as aggressive as you and I, because we're both aggressive, right? We're always trying to get the most for our clients. Here's an easy script for realtors to use. Given how much equity your seller has, would they be open to offering a credit to help my buyer's affordability? That's it. Every real estate agent can look up how much money your seller has. We can look at the market and be like, wait, you bought this house for $400,000. You're selling it for $575,000. We know your seller has the equity, right? Be aggressive. Lean into that kind of language.
Here is a bonus tip. Bonus tip is the house vacant or occupied? If it's vacant, there's nobody paying the mortgage and they want to sell it.
Yep.
And they would have to either get a renter in there or they would have to move back in.
Yep.
They're not going to move back in.
100%. Even if they've paid off the house, they're still paying property taxes. They still got to keep the water, power. They still got to keep the house clean. There's still costs that go into the house,
100%.
right?
Yep.
So everyone talks about high interest rates, but nobody talks about the discounts. Everybody talks about how much it costs to get into the club. Nobody talks about how many pretty girls are going to be there, right? It's all in how you phrase the language. The market has finally flipped for buyers and nobody is telling them the truth, but we have today, Bill. So I'll ask again, would you take free money to buy a home? And I think before you clicked on this video and listened to this, your answer was already yes. If that's the case, let's find out how much you can get. Before you tell yourself no, before you tell yourself you can't do it, let's find out how much free money we can get you. Bill, what is the best way for them to contact you for a free consultation?
Free consultation. Go to billgaylord.com and you can basically schedule a consultation right there.
He'll tell you if it's better for you to use FHA loan. He'll tell you if it's better for conventional. He'll tell you, hey, here's what you can afford right now. A lot of you guys think that you can't afford a house until Bill goes, actually, you could probably get a $450,000 house right now if you wanted to.
My biggest thing is if you have money for the down payment, whether it's through your savings right now, your 401k, gift funds from family members, I can't talk, you are in the game.
Mm-hmm.
If you're in the game, you go to Brandon and he negotiates the free money from the seller so that you can buy a house now.
Yep. I'm Brandon from Vegas. If you want to contact me to see how much we can rip a seller off, fill out the real estate form in my bio on TikTok, Instagram, or in the description below on YouTube, and comment free money if you want us to go over all the things that you guys can do with seller credits and how much money you could get. We'll go over the numbers, what 6% is for your house, and we'll tell you every single way to rip a seller off and maximize your money. Just comment free money below, and we got you guys. As always, Bill, thank you for your time. I'm Brandon from Vegas. This is Mr. Bill Gaylord.
Thanks, Brandon.
Come and be my neighbor. Peace, peace, peace. My podcast team loves when I do this. They think it's funny and cool. They really like this. They tell me to do it every time. It's